Hi guys, Tardass McGee, Stock Picking Genius here. Today I'm just going to read this article that covers the just announced cuts to oil production. If you want to read this article instead of having me read it to you, it's on Yahoo Finance. It's by the AFP. It's a French news organization. But I'm just going to read it. It goes over, does a pretty good job explaining the whole situation. So we'll start reading now. Major oil powers, led by Saudi Arabia, announced a surprise production cut of more than 1 million barrels per day on Sunday, calling it a precautionary move aimed at stabilizing the market. The reductions, on top of a Russian decision to extend a cut of 500,000 barrels per day, and despite U.S. calls to increase production, risk stoking inflation and pressure to raise interest rates. Cuts by Saudi Arabia, Iraq, the UAE, Kuwait, Algeria, and Oman from May to the end of the year will top 1 million barrels per day, the biggest reduction since the OPEC Plus cartel slashed 2 million barrels per day in October. Russia, a leading member of the OPEC Plus cartel, it's pretty interesting use of words there, calling it a cartel, said it was also extending an existing cut of 500,000 barrels per day to the end of this year, describing it as a responsible and preventative action. Oil prices soared almost 6% in Asian trade on Monday morning, with West Texas Intermediate jumping by 5.4% to $80 a barrel, and Brent climbing 5.67% to $84.42. A Saudi Energy Ministry official emphasized that this is a precautionary measure aimed at supporting the stability of the oil market, the official Saudi press agency said. The cuts follow a drop in oil prices triggered by jitters over the banking sector following the collapse of U.S. lender SVB and UBS's hurried buyout of troubled rival Credit Suisse. UAE-based oil expert Abraham El-Gehenti told AFP. So that's a great name. Brent crude oil prices, trading just below $80 a barrel late last week, should bounce to above $80 as a result of the reductions, he said, calling prices below $80 unacceptable for OPEC+. The producing countries adhere to a balancing level that supports their large financial budget this year and their next economic plans, El-Gehenti said, covering recessionary pressures. The reductions follow a controversial decision in October by OPEC and its allies, including Russia, collectively known as OPEC+, to slash production by 2 million barrels per day. That cut, the biggest since the height of the COVID pandemic in 2020, also came despite concerns it would fuel further inflation and push central banks to hike interest rates. OPEC raised its 2023 world oil demand forecast in February, saying it expected demand to grow by 2.3 million barrels per day to an average of 101.87 million barrels per day this year. But initial expectations of higher demand in the second half are now challenged by the prospects of continued high inflation and recessionary pressures, said Gulf analyst Yasser El-Malaki. OPEC is taking a preemptive measure in case demand reduction in the second half is possibly higher, he told AFP. Saudi Arabia will cut 500,000 barrels per day, Iraq 211,000, the UAE 144,000, Kuwait 128,000, Algeria 48,000, and Oman 40,000, each country announced. The reduction ignores calls from the United States to raise production as consumption rises and as China, the world's biggest oil consumer, reopens after its COVID shutdown. As world economies recover, we will see more consumption, and therefore we would like to see supply meet demand, says Jose Fernandez, the U.S. Undersecretary of State for Economic Affairs, Energy, and the Environment, on the sidelines of the CERA Week Energy Conference in Houston, Texas last month. On Monday, OPEC Plus, the 13 members of the Organization of the Petroleum exporting countries and 11 non-OPEC allied countries will hold a joint ministerial monitoring committee meeting by video link. U.S. President Joe Biden has regularly called for an increase in the OPEC Plus output since Russia's invasion of Ukraine early last year sent prices soaring above $120 a barrel. After the cut in October, which preceded U.S. midterm elections, he warned of consequences for Saudi Arabia, a long-standing ally. So it's a pretty interesting article. I mean, I don't know who's to blame here. Is it just OPEC? Is it Russia? Is it China? Is it Joe Biden? I don't know. Leave your comments below, and thanks for watching.